This episode of Market Talk is brought to you by Growmark FS. Keeping up on the latest in ag is a challenge, to say the least, but there are experts nearby ready to help. You'll find them at your local FS. You can trust them to bring you customized agronomic grain and energy solutions born of the latest thinking. That's because FS specialists receive continuous training that keeps them current on the latest trends, practices, and technologies. So you'll get local expertise that's both exceptional and up to date. Visit fssystem.com to learn how FS is bringing you what's next. And joining us now to talk about Tuesday's market trade action, we welcome in our good friend Matt Bennett with agmarket.net. Matt, great to catch up with you, man. How are you?
I'm doing great, bud. Thanks for having me.
I appreciate the time. I know you're traveling today and busy with the speaking circuit in St. Louis, but we appreciate you jumping on the show today. Matt, overall Tuesday's trade action, grains to the upside led by soybeans. Corn was firm, wheat was kind of choppy, but overall, we saw the lower than expected crop ratings Monday afternoon from USDA. We're starting to see some of these different crop tours now. We're starting to see some different yields come out that are looking lower. It just felt like maybe we put some premium back in because of that on Tuesday. Would you agree?
Yeah, absolutely. You came out yesterday afternoon with this grow DTN number 167, I believe, 48.5 or something like that.
I think that's right. Yep.
I knew the corn number. It hit me. At first, I thought 177, no big deal. I'm like, whoa, 167. That's a little different story. The thing about it, I know a lot of people are saying, oh, well, whatever. People are going to throw numbers here, there, and everywhere. Well, tell you what, that grow number from DTN, thermal imaging, pretty high-tech stuff, it's actually been fairly accurate in the past couple of years. So, I'm not saying I'm a sub 170 guy, because I'm not, but I can tell you that type of number from a system that's performed the way that it has definitely turned some heads, and so you start looking at, obviously, whether you're talking corn or beans, either one of those numbers would be wildly bullish because we're already looking at carryout numbers, that are just awfully darn tight. Yeah, the corn condition rating going down 3%. My personal thought last Monday was that, last Monday it seemed like we kind of stabilized things just a little bit on ratings. But I told my partners, in fact, I made a side bet with one of my partners. I said, corn and beans combined going to be down 4% next week. And I got kind of nervous because I thought that the weather maybe wasn't as bad as what I thought it was going to be. But still, whenever you throw 100-degree temps, even for a couple of days at this corn crop, when it's trying to pollinate and grain fill, it's not good. And so in the hot nights, is what people don't understand really take a toll on this corn. It just can't cool off at night. It can't take a breather, so to speak. And so definitely crop ratings played into it as well. I think that there's a lot of traders that maybe lost interest that saw those lower ratings, first of all, and saw that lower yield and said, maybe we want to go ahead and keep these long positions and see what this report has to say Friday.
Well, and looking at the corn crop specifically here, Matt, you mentioned that 167 number coming in from the Grow DTN virtual tour. Let's say we end up with a lower 170 number in corn, even a number like a 172, 173, 174. That's still going to tighten up that balance sheet a little bit to where I would think we got some upside to go in this corn market to try and ration demand if we end up seeing a number even, low 170s, Matt.
Yeah, so my thought is that if you get below 175, you start to get the attention of folks. A 175 and above, you're still probably going to hold in that 1.4 or above as far as carryout's concerned, which, let's face it, when you're growing 15 billion bushels, that's tight. That is extremely tight. But 1.4 or below, I think, is where the trade's going to get super on edge, if you will. And so a few things are going on, in my opinion. You've got to ask yourself, what's old crop stocks going to look like on Friday? Some folks think we're looking at further tightening due to ethanol numbers performing well. Others feel like actually you're going to add maybe 25 million to carry because ethanol hasn't been as strong maybe at times in the last few weeks. Part of that's gasoline demand, but I mean, looking at the numbers as I see them, Jesse, I don't think that's going to be the case. I'm just saying there's a whole host of thoughts. And so, if you come in with a carryout on old crop of 1.4, then that's what you're carrying in. You got to understand you're carrying that into a situation where you don't have a plethora of acres by any stretch here for 22. First of all. Second of all, I think with some of the issues we saw this week with, like, for instance, the first cargo coming out of Ukraine getting rejected due to the time lapse. I mean, they don't want to pay that demurrage. I mean, it's going to be extremely expensive. That certainly is something that we have to keep a close eye on because, there's no question that your demand could be awfully strong for U.S. corn, especially once you run out of Brazil corn. So there's a lot going on here, but I agree with you. You get below 175 and it starts to get, in my opinion, that scenario where you can really make a strong case for, I don't know, 5.25, 550 corn or better. And so a very similar type setup is what we've had over the last couple of years, quite frankly. It was 2 years ago today, Jesse, you and I would have been talking about wanting to have a beer while we were talking because we were depressed, and then the ratio came in, Chinese buying came in, and it's been, we all know the story since then. But guys, we got to remember, we're still in really good shape. Yes, the markets were up today, but you've heard it and I've heard it. People are down in the dumps because corn's only $6 or beans are only $14 or below. Come on. Let's be realistic about it. I know that costs are a little bit higher. There's no question, but we're still looking at a very profitable situation right now.
Very true. You mentioned a point about maybe getting on the long side, especially in soybeans on the day Tuesday. It felt like some of those fund traders really put the money back in there. I know spot contracts, old crop, some new daily highs there, but even new crop up, 25, 30 cents on the day on Tuesday. And I wonder as well with soybeans versus corn a little bit if maybe there wasn't more movement in soybeans on the day just because the old adage that beans are made in August and we still got, a couple weeks left to go here for the month of August, Matt.
Sure. Yeah, I agree with you. And I think when you look at the rainfall distribution over the last weekend, the people that got the rain, they got a lot of rain. I mean, what a blessing, to get 2, 3, 4 inches of rain. I talked to folks in northern Iowa that had 4 inches of rain or more and didn't have any water standing. And I was in those shoes back over the 4th of July weekend. We were super dry. And then we came in and started getting rain, and we didn't have water standing forever. But bottom line is this, the guys and gals that didn't get the rain, they didn't get any rain. And so it's a really worrisome situation, especially, as you say, August is when you make the crop. And so I'll tell you what, if you can't catch a rain whenever so many people are getting that much rain, one thing, it's just defeating. It is so depressing for the folks, and I feel for them. The other thing is, though, is it tells you point blank that you're running out of time. The 2-week forecast doesn't look all that promising for the areas that are dry. And I think people are looking at this saying, what if we do have sub 50? If we have a sub 50, due to the fact that August is not conducive across the board to having good bean yields, you have a sub 50 and all of a sudden you're looking at you're definitely going to have to ration demand. Now, the flip side of that we have to remember, I always want to try to talk about both sides. I don't want to talk out of both sides of my mouth. I just want to talk about the other way of looking at this, is that this is a futures market. And so Brazil already said 4%, 3 to 4% more soybean acres this year. They're going to plant more safrinha crop, corn on the second crop. They're coming to the table with more acres over this next year. And so with some of these guys talking 150 to 154 as far as the Brazil crop on soybeans, let's keep that, in the back of our mind as you see any sort of excitement over U.S., whether you're talking 22 or 23. You know what? Pay attention to it, because there could be some real opportunity in here, especially if August turns out to be as rough on us as what a lot of these forecasters are currently calling for.
And I think I saw a stat the other day on the Brazil thing. I don't know how accurate it is, but something to the effect they've added the equivalent of an Indiana and Illinois to their acreage. I don't know how correct that is, but that would make sense, make total sense. Matt, overall, heading into this report, it feels to me, you mentioned this, with some good prices here, but to me, it feels like if I'm someone who doesn't want to make many moves, at least putting in a floor and locking in some risk management, being smart ahead of this report on Friday, that seems to be probably the best move I could do right now. Would it not be?
Yeah, and I guess that brings up a great point is that, someone in my part of the country, not everyone's going to have a bumper crop, but we've had a lot of moisture. So that means you're at least going to probably have an APH or better crop. I don't want to make anybody mad, but you're going to have to really try hard to screw that up if you're raising a big crop this year, because prices are fantastic if you're raising a crop. Where it gets dicey is if you're not raising a crop. That's a really tough row to hoe for some of these folks. And so in that situation, you look at these prices and you stop and think, well, what could happen? Yeah, you probably need to have some risk management. And here's why. My cohort, Brian Splitt, wrote a fantastic article last week for Farm Futures, and he talked about, what happened a year ago. And what happened a year ago on the August report is you had a bullish corn number, you had a bullish bean number, period. Corn was down like 5 bushels from the July estimate. And so what did we do with those bullish numbers? Well, between then and the September report, we dropped almost $1 on corn and almost $2 on soybeans. And so that was with bullish numbers. And so I always tell folks, if you're expecting a bullish report, and I think a lot of folks are, by golly, it better be really bullish for you to get the kind of reaction that you want to see. And so, to answer your question, absolutely. Hey, you know what? If we have excitement this week, if we get a sharply higher move on Friday due to a low number, what a wonderful opportunity to at least step in and put a floor in if you're not raising the bushels. And what a wonderful opportunity to sell physical bushels if you've been blessed by good weather.
Fantastic advice. Matt, livestock on the day Tuesday, fairly quiet, mostly to the downside, led by feeders and live cattle. I know the hog market was a bit more mixed, especially the front month August and deferreds, but overall livestock seemingly just kind of took their cue from a higher grain market on the day Tuesday. Is that what you saw?
Yeah, I mean, it's going to be hard to rally feeders. In generally, it's going to be hard to rally hogs if you see, for instance, soybean meal up. It's going to be hard to rally feeders if you see corn up. I mean, it's just the way it works. And so I guess that's pretty much what we saw happen. Now, last week, of course, we had pretty good, strong movement in cattle. As you know, I've been fairly friendly cattle. I think, one thing that is really tough, I think it's tough for some folks to even talk about, is what's going on in the drought-stricken areas. Like, for instance, in let's talk Texas, Oklahoma, Kansas. There's a lot of cattle getting sold in that part of the world because you don't have pasture, you don't have hay. And quite frankly, you're not going to raise a very good crop on dry land at this point. And so there's a lot of cattle getting liquidated. Some of them are getting slaughtered. That's not doing anything to make our numbers situation better. And so with it looking like we're at least going to raise a crop, with most people's estimates, I've got to think that corn prices will at least stay under control, like not $8 under control. And so with that being the case, I'm still looking out to maybe first quarter, second quarter of 23. I'll tell you what, I wouldn't want to be selling fats. I think as a producer, if you can lock in profit, no problem there. I don't want to be mistaken in how I'm explaining this. But from a speculative standpoint, boy, I just don't think that'd be a good play at all, because I think you could see some super fireworks. Now on hogs, I don't know. It's tough to even $122 hogs. I think the last time we talked, they were probably 118, and you asked what I thought I would do, and I thought 120 seemed too rich. So, as a disclaimer, never trade hogs based on anything I said. But first of all, second of all, though, $122 hogs. I mean, you look at your next month out, October 99.60, and Dece $89. So when's the last time you saw a $33 inverse from two options? And so you see this huge inverted market. Numbers are pretty low as far as hogs are concerned. Demand's been pretty strong. But it makes it really hard on a hog producer if they're independent. And I know there's not a lot of them, but there's still several. It makes it pretty hard to figure out exactly what to do. But most of them that I know can still make really good money at $90 hogs. So that's the really good news. But as far as speculatively, I struggle to think that we can get much above the area that we're in right now in front month. But the only time will tell. I think the real interesting thing is going to be when August goes off the board. What's October do? Because if it goes and chases where August was, it's going to be an interesting dynamic that will likely pull up to an extent, your December as well.
Well, Matt, great stuff. I know you got a speech to get ready for. Any final thoughts for us real quick before we run out of time?
Yeah, I think the main thing, as always, is going to be look and see what today's prices mean for you as a producer. Because the long and short of it is that these prices are not what they once were, especially as far as corn's concerned. But I know a lot of folks that are telling me right now, if they raised a crop, be the best income year they've ever seen. So that is if we don't mess things up. Think about what happened a year ago. Try to tune people out if they want to get bullish on you with any sort of upward movement this week, because upward movement at this time of year should be looked at as an opportunity rather than something that gets me more bullish. And that's what we tend to do from an emotional standpoint. Is when the markets are going up, we get more bullish instead of looking at it as an opportunity.
Well, Matt, great stuff. As always, I know folks can contact you and the team, agmarket.net. The app is in the App Store, agmarket.app. A lot of great ways to get in touch with you guys. And I always appreciate the time, Matt. Thanks for joining us today.
Yeah, absolutely. Appreciate you having me.
Matt Bennett with agmarket.net joining us today on Market Talk. That's going to do it for the show. Find us, markettalkag.com. I'm Jesse Allen. Have a great afternoon.